What exactly is a ticking time bomb for the Chinese economy? Financial disaster victims. P2P finance collapse is a CCP trap and robbery. Li Qiang's absence from two major meetings, is she signaling a leftward shift? China's epidemic worsens, lung nodule cases surge, experts' leaked remarks raise alarm. June 4th witness reveals more victim photos, Hong Kong media reported over 10,000 deaths. It's all covered in today's China Truths. What exactly is a ticking time bomb for the Chinese economy? The savings of Chinese individuals and businesses are buried in abandoned real estate projects, as property values have been dropping for 10 months straight. Bad debt from the real estate sector alone, not even counting the surplus inventory warehouses and used rail projects, and more, is forcing China to pump seemingly endless amounts of money into its economy. According to data from the People's Bank of China, PBOC, as reported by Trading Economics, the total money supply in China, known as M2, has reached 301.2 trillion yuan. At the current exchange rate of 7.24 yuan to the dollar, this is equivalent to approximately $41.6 trillion USD. This amount is over twice the size of China's GDP for 2023 and significantly exceeds the M2 money supply of the United States, which stands at $20.84 trillion. To provide further context, Beijing's M2 is roughly equal to the combined money supplies of the United States, Eurozone, and Japan, $20.84 trillion, $15.14 trillion, and $8.1 trillion, respectively. Chinese economists, as noted by the Vision Times, assert that their methodology for calculating M2 adheres to International Monetary Fund, IMF, standards, making it comparable to the approach used in the United States. Notably, China's M2 to GDP ratio, at 231.5%, starkly contrasts with the United States ratio of 81.7%. This significant discrepancy raises questions. Why is China's ratio nearly triple that of the US, and why is there such a necessity for massive capital injections into China's commercial banking system? China's credit-addicted economy. The M2/GDP ratio, a gauge of financial depth, indicates that when significantly higher than GDP, an economy leans heavily on borrowing from the banking system for growth. This borrowing is typically for short-term needs rather than for long-term investments in areas like technology or infrastructure. This ratio's disparity between China and the US highlights differences in their financial market structures and developmental stages. China's less developed capital markets mean that both businesses and households primarily depend on short-term bank loans, unlike in the US, where a robust capital market exists, allowing companies to finance through bonds and stocks instead of relying solely on commercial banks. This lowers costs and makes the bond market attractive, as it mobilizes vast amounts of idle financial resources from society, professional investment funds, and pension funds. Over the past decade, the rise of financial companies, securities firms, and financial funds, essentially shadow banks, has primarily served the real estate sector. These shadow banks have close ties to tech giants like Alibaba and Tencent. However, recent policies aimed at tightening regulations on shadow banking and integrating them into the commercial banking system have disrupted this emerging structure. This has forced China's economy to become even more reliant on the commercial banking system. Crucially, the Chinese government, through state-owned asset management companies and state-owned enterprises, holds stakes in all commercial banks, from large central banks to small local ones. The People's Bank of China reports that China's total economic debt is approximately 390 trillion yuan, about $53.8 trillion US, which is 3 times its GDP. Of this, commercial banks provide 70%, equivalent to 200% of GDP, with only 30% funded through the stock market. This contrasts sharply with the US, where commercial banks finance a much smaller proportion of the total debt at $17.5 trillion US, 68.6% of GDP, while the bond market contributes nearly $50 trillion US, 200% of GDP. Furthermore, the US stock market exceeds $40 trillion US. In terms of monetary mechanics, when companies borrow and repay, their loans transition into deposits at different banks, necessitating commercial banks to borrow from the PBOC, thus expanding the money supply. On the other hand, financing through bonds does not increase the money supply. China's economic growth relies heavily on its M2 money supply. However, excessive growth in M2 risks future financial instabilities, like inflation and market speculation. This raises concerns about why China continues to expand its money supply disproportionately compared to its GDP growth, and why this expansion has not led to significant inflation in commodity prices. Massive money supply offsets hidden bad debts in commercial banks. Unlike other economies, China's M2/GDP ratio has been skyrocketing year after year. Over the past 2 decades, it has doubled, with each year surpassing the previous one. This is likely why the world's second-largest economy has earned the nickname credit-addicted economy. But why is China so hooked on pumping out cash? The real estate sector, accounting for a hefty 25 to 29% of the country's GDP growth, is heavily reliant on credit and borrows extensively from commercial banks to finance its projects. These projects, in turn, are a crucial source of revenue for local governments at all levels. Whether or not the properties actually sell, or if there's even demand for them, local governments still need to shake hands with real estate developers to sell land and develop cities to fill their coffers. Land sales cover a staggering 95% of total local budget expenditures. Since local commercial banks are also state-owned, with personnel appointed by local officials, they are not truly independent. For decades, they've been directed to lend to real estate development, regardless of the risks of oversupply in the market. This has led to the current glut of real estate in China, with 50 ghost cities and 64.5 million empty apartments. CNN reported that experts estimate there are enough empty apartments in China to house the entire population of Germany. If commercial banks are the ones bankrolling this oversupplied and declining real estate market, with prices falling for 10 straight months as of April 2024, what's happening to them? Unrecoverable bad debts are growing, and as new debts and obligations pile up, commercial banks are forced to borrow more from the People's Bank of China to keep enough cash on hand and hide these bad debts. The larger the bad debt, the more money from the M2 money supply fails to be absorbed into production and consumption in the real economy, and is instead largely thrown into the enormous bad debts lying dormant across various real estate projects throughout China. This situation explains why China's M2/GDP ratio continues to rise sharply each year. While GDP growth is slowing down, consumption is decreasing, and prices are not increasing. The real amount of bad debt held by Chinese commercial banks is much like a ticking time bomb for the economy. This might be why Reuters experts suggest that the true scale of bad debt in Chinese commercial banks could be up to 14 to 15 times higher than what is officially reported. Financial disaster victims. P2P finance collapse is a CCP trap and robbery. After the collapse of China's peer-to-peer, or P2P, financial sector, the Chinese Communist Party reset all platforms to zero, leaving tens of millions of people unable to recover their lent funds. Those affected, referred to as financial disaster refugees, who have been advocating for their rights, face severe oppression from the authorities. These refugees assert that the P2P collapse was orchestrated by the Chinese government as a trap to steal the public's hard-earned money. At its peak, there were more than 6,000 P2P internet financial platforms in mainland China. By the end of 2020, all of these platforms were shut down. One notable case was Tuandai.com, which was controlled by Dongguan police in March 2019 and subsequently declared bankrupt. At that time, it reported outstanding loans of 14.5 billion yuan, nearly $2 billion, involving 220,000 lenders and 370,000 borrowers. The financial disaster refugees have criticized the government's approach, describing it as a sweeping and unjust dismissal of the entire internet financial sector. They argue that legitimate lending activities were wrongly categorized as illegal, leading to a broad seizure of assets that they view as an outright theft of the lender's investments. Earlier this year, the Dongguan Intermediate Court offered to return 34% of the owed funds to the victims of Tsunami.com. However, the catch was that these victims had to first acknowledge their involvement in what was labeled as illegal fundraising. Ms. Qiang, a victim of Tsunami.com, expressed her frustration, pointing out that the money from new lenders was used to pay off previous debts in what she describes as a despicable act of collusion between business and government officials. She criticized the corrupt practices that allow such manipulation and exploitation of ordinary people, which she finds inexcusable. Following the platform's failure, the original team responsible for collecting loan repayments was disbanded. The Dongguan government established a new team, but investigations by a victim in May revealed that the repayments collected were being intercepted by the authorities rather than being returned to the lenders. This discovery added to the grievances of those affected, who feel that both their initial investments and the supposed repayments are being unjustly withheld by the government. This situation has led to a strong backlash from the victims, who accuse the government of manipulating the crisis to profit at their expense, effectively eating from both sides of the plate by seizing both the lent and the repaid funds. This, according to Ms. Wang, another victim, highlights a deep-seated corruption that further erodes trust in the system. Li Qiang's absence from two major meetings, is she signaling a leftward shift? The long-awaited third plenary session of the CCP, which had faced delays, is now scheduled to occur in July in Beijing. In preparation for this key meeting, Xi Jinping conducted a discussion meeting in Jinan City, Shandong Province, with business and expert leaders, emphasizing the need to deepen reforms across the board. Taiwanese economist Huang Shirtsong offered insights into what deepening reform means, increasing economic openness and reducing restrictions. However, he pointed out that the CCP's interpretation involves strengthening regulatory measures and shifting economic policy leftward. According to Mr. Huang, this suggests that the upcoming session might take a significantly different direction from what international observers anticipate. Senior media personality Yan Chungo analyzed the discussion meeting on Facebook, suggesting that while it appeared to be an open forum for expert advice, it effectively served as a platform for Xi to outline and dictate the future economic direction of China. The meeting was also notable for the participation of Zhou Qiren, a reform-minded professor from Peking University, whose attendance stirred speculation among attendees about potential significant reforms. However, Mr. Qin Peng, a political and economic commentator living in the U.S., remarked that Zhou's liberal economic views, which favor minimal government intervention and market-oriented reforms, clash with Xi's preference for strengthening state-owned enterprises. This difference highlights a fundamental tension in the CCP's reform strategy. Amid these discussions, Chinese Premier Li Qiang seems increasingly marginalized in the decision-making process concerning deep reforms. Other senior officials, such as Wang Huning and Kai Chi, were present at these critical discussions, while he was relegated to conducting research in Henan, signaling his reduced influence in shaping economic policy. Since becoming premier, Li Qiang has consistently been sidelined. His press conference at this year's two sessions was notably cancelled, and alongside this, the CCP revised the organizational law of the State Council, reducing the powers of both the State Council and the Premier. On May 27, the CCP Politburo held a meeting to discuss promoting the so-called rise of the Central Region and implementing stricter regulations for financial risk management. The focus was on enhancing financial regulations to be more incisive and robust. Notably, Li Qiang, who heads the Financial Commission, was absent from this crucial meeting. Mr. Huang Shirtsong commented, evidently, Li Qiang is unable to turn around the economy on his own, as this year and beyond, China's economic prospects are being closely scrutinized by foreign investors, with a similarly uncertain outlook domestically. As a result, Xi Jinping himself is taking a more active role in highlighting their commitment to economic issues. Analysts suggest that China is currently grappling with significant economic challenges, prompting the CCP to aim for stabilization through stringent regulation to address financial risks effectively. Mr. Huang further explained, the message being sent is that although the reforms are officially aimed at improvement, the agenda leading up to the third plenary session suggests a tightening of regulations. While stimulating the economy is essential, increased regulatory measures can be detrimental to a free market economy and indicate a shift towards more left-leaning policies in the future. Recently, Du Wen, the former executive director of the Legal Advisory Office of the Inner Mongolia Autonomous Region government, remarked that Xi's approach to reforms seems more focused on strengthening the party's power than on freeing up market forces. It's likely that the decisions at the third plenary session will favor a move towards a planned economic model. China's epidemic worsens, lung nodule cases surge, experts' leaked remarks raise alarm. The new coronavirus epidemic continues to spread across China, with infected individuals showing a variety of symptoms. However, authorities have consistently hidden the truth. Recently, there has been a sharp rise in the number of people diagnosed with pulmonary nodules. On May 29, Chinese state media reported that annually, between 10 and 20 million new cases of pulmonary nodules are diagnosed in China, with a significant rise in the last 2 years. Why is this occurring? Academician Zhong Nanshan of the Chinese Academy of Engineering explains that due to COVID-19, many people suffer from fever and colds accompanied by coughing, leading to numerous CT scans. Furthermore, between 30% to 40% of healthy adults show nodules of varying sizes. In response to Zhang Nanshan's comments, current affairs commentator Li Lin remarked, "This epidemic is obviously severe in China, yet much of its impact has been concealed." His comments have shed some light on the situation. I believe if he were to fully disclose his data, it would shock the whole world. The epidemic crisis has led to overwhelming hospital admissions, particularly noticeable in pediatric departments in cities like Shanghai, where facilities struggle to manage the influx of patients. Meanwhile, the government has been altering the narrative by attributing respiratory symptoms to various other diseases, ranging from mycoplasma pneumonia to different strains of influenza, and now to pulmonary nodules. The community's frustration is palpable, with people like Mr. Wang from Dongguan noting that common colds have become a new norm, yet the reasons remain unexplained by medical professionals, leading to expensive hospital visits. Additionally, reports from residents and media like the Epoch Times suggest an increase in unexpected deaths among different age groups, including prominent figures and CCP officials, further indicating the severity of the pandemic in China. June 4 witness reveals more victim photos. Hong Kong media reported over 10,000 deaths. As the 35th anniversary of the June 4 massacre approaches, Wu Renhua, a scholar from mainland China and a survivor of the massacre, posted photographs of 3 victims on the X platform on May 28. He stated that these photos, provided by the original photographer who wishes to remain anonymous for safety reasons, are being publicly shown for the first time. Wu Renhua explained that the photographs were taken at noon on June 4, 1989, inside the teaching building of the China University of Political Science and Law. Due to YouTube's platform policies, we had to blur this image. In his post, Wu described how 3 tanks from the Tianjin garrison's 1st Division pursued students retreating from Tiananmen Square early that morning. When tank number 106 turned, it resulted in 11 deaths and several injuries. A local entrepreneur used his truck to transport 5 of the bodies to the China University of Political Science and Law, hoping to use them as evidence in prosecuting the troops enforcing martial law for the massacre. Initially, the 5 bodies were placed on desks at the entrance to the university's teaching building. Around 10 a.m., as Wu and approximately 20 students returned from Tiananmen Square, they came upon the tragic scene. By noon, 2 of the bodies had been identified and collected by their respective schools. 1 body remained unidentified for an extended period and was kept inside. In later posts, Wu also identified 2 of the victims, Lin Renfu, a doctoral student at the University of Science and Technology Beijing, and Wang Peiwen, an undergraduate at the China Youth Political College. Many eyewitnesses commented on the post, sharing their memories of witnessing these tragic scenes. However, this tweet also drew numerous members of the CCP's 50 Cent Army, who cited various so-called evidence to deny the authenticity of this photo. In response, Wu Renhua commented, "Posting this photo of a student victim from June 4 brought out many 50 Cent members. It's been a while since we've seen this kind of reaction. Clearly, it hit a sore spot with the CCP. After fleeing overseas, Worsens dedicated himself to extensive research on the 1989 democracy movement. He published many publications, among them his inside story of the bloody clearance at Tiananmen Square. As the anniversary of June 4 draws near, many netizens on the X platform are posting tweets to remember the victims and denounce the CCP's atrocities. This includes a front-page photo from the June 5, 1989, edition of Hong Kong's Tin Daily News. Although the photo is blurry and the article's text is indistinct, the headlines are vivid, detailing the horrific events, such as tens of thousands of civilians and students slaughtered overnight. It mentioned the 38th Army being used as bait for an excuse, while the 27th Army engaged in a collective massacre. Out of the casualties, 2,000 bodies were identifiable, while many could not be recognized. From the evening of June 3, 1989, to the early morning hours of June 4, CCP troops moved towards Tiananmen Square from various routes outside Beijing, slaughtering civilians attempting to stop them, followed by a massacre of the protesting students in the square. The exact number of casualties that night remains unknown. In December 2017, Hong Kong 01 referenced a British declassified intelligence document, which reported that an internal estimate by the State Council of China counted at least 10,000 civilians killed on the day of the Tiananmen massacre. Don't forget to leave a comment in the section below to share your opinions on today's topic with us. Make sure to like and subscribe to see more interesting topics from China Truths.